Friday, November 25th. Some years Thanksgiving comes early, especially to markets. There hasn't been any particular economic data this week, and so markets are pretty much as they've been, and you can feel traders sort of dribbling out the door as screens go quiet. But there's some signals that are in the market, and they're subtle, but they're sending a signal that the next step is down. That may be too optimistic. It's certainly early to make a judgment like that, but that's the signal. Is the Fed's overnight cost of money is now 1.75%. Now they use a range that's 1.5 to 1.75, but markets use the higher end of it. The yield on a 10-year U.S. Treasury note today is 1.77. The most Fed-sensitive marker anywhere is the 2-year Treasury note, and it's been sitting at 1.6 now for a little more than a month. So the question, why would I buy a 10-year security or even a 10-year security to get a yield that I could get overnight in cash? Why not just leave my money in cash? And the only reason to buy a longer dated security at the same rate that you get from cash is if you think that the yield on cash is going to go down. There should always be a positive spread between short-term money and long-term money. Risks expand with time. So longer dated, longer maturity IOUs ought to pay you more money. Now there are a couple of reasons for the phenomenon. One of them doesn't have anything to do with predicting the future, except in a roundabout way. Most of the economic trouble in the world, arguably all of it, is outside the United States, not in it. This Japan, China, and Europe all have troubles all their own. Yields on U.S. securities, because we're not in trouble, are higher than they are overseas. U.S. 10-year 1.77, Italy pays 0.5% less than that. So there's money coming into the United States from all over the world, both attracted by yields and attracted by safety, which pushes down on longer-term yields. So that's one explanation. But circling all the way back around, if the outside world sinks, sooner or later we will too. And the signals there are murky because China's data is untrustworthy. It's politically jiggered and hard to tell in real time what's taking place. Europe, on the other hand, is transparent. Europe is vastly more sensitive to trade, global trade, than the United States. The U.S. economy, maybe 12% of the U.S. economy is related to trade. Germany is more than half. The primary trouble that the global economy faces in the near term has been a trade war, which has not been handled well either here or in China. Europe will feel it first, so Europe is the canary in the coal mine that would let us know if global trade damage is moving from manufacturing to the rest of economies, and that bears watching. We feel paralyzed here from time to time. Europe's worse. The only entity in Europe that can help Europe is Germany. Europe is now beyond the ability of the European Central Bank to rescue. And Germany simply cannot cope with the idea that Germany needs to behave like Italy and borrow money and spend it to make it possible for the others in Europe to revive. So there isn't any rescue near at hand. One other signal, the Fed meets about 9 times a year at an irregular interval, not quite monthly, faster than quarterly. The Fed, a month after each meeting, 3 weeks after each meeting, releases the minutes of the preceding meeting. Yesterday we got the minutes of the Fed's October meeting, at which the Fed cut its interest rate and said that it would stay put, said it was content with monetary policy and interest rates now. These minutes are 13 single-spaced pages long. This set of minutes, like the ones from the preceding meeting, the first 2 pages are devoted to nothing except planning for what the Fed will do if the economy gets in trouble again, the Fed cuts to 0, and the U.S. economy doesn't respond. What will the Fed do then? A discussion at the Fed recited in its minutes at that length, 2 meetings in a row, that's not an academic conversation. That's the Fed laying plans that it expects to have to use. It doesn't know when, and it would certainly rather not, and it doesn't want to do anything to create the need. But it's in discussions with itself and by inference with the rest of government about what it is that we're going to do if they get stuck again. That's a forecast of a kind. If the odds of that situation were very low or remote, the Fed would not be talking about it with that depth and intensity. So it's customary at this time of year to Thanksgiving to give thanks for a whole bunch of things. I'm working on that. There's family, friends, neighbors, local community. Reaching outside of that, it's a little thin out there. It's kind of like making turkey sandwiches with turkey feathers. These deep discords here in the United States and between us and China. A Thanksgiving thought. The parties are so far apart that there is no convincing the other side. There's no threatening the other side. There's no forcing the other side. And spend a little time thinking about how it feels on the other side. My mother was depression scarred from Ada, Oklahoma. And when I was in a cranky mood as a child, or for that matter as an adult, Mom would say to me, "Now Louis, you can either look at the donut or you can look at the hole. And while you're at it, don't make up your mind about somebody else until you've walked a mile in his moccasins." This Thanksgiving I'm going to attempt to do that. I'm going to think about the political leanings here and abroad with which I disagree and see if I can figure out what makes them that way rather than just being mad at them. Just a thought. Happy Thanksgiving.